morning. You're watching Businessworld Live. I'm Danie Laurel. It's the start of a new trading day. Let's go straight to our banner story. The country's economy grew faster than initially reported in the second quarter. The PSA has slightly revised the April to June GDP to 12% from the previous estimate of 11.8%. Major contributions to the revision were higher growth rates in education, construction, and financial and insurance activities. GDP adjustments are regularly conducted to take into account the updates or releases of important data. This revision comes ahead of the release of the third quarter GDP figures. The PSA will announce the July to September print later this morning. Now, the Philippines has fallen behind in terms of economic integration in the Asia-Pacific region. That is, as the country registered the poorest performance in an index measuring 17 economies' performance in 2019. The Pacific Economic Cooperation Council, in one report, said the Philippines' integration performance still has the biggest gap behind the regional average. Additionally, its convergence ranking remains the lowest among all 17 economies in both 2015 and 2019. The index measures the degree of economic integration in the region based on trade of goods, investment, and tourism. It also measures convergence in GDP per capita, that is the share of non-agriculture to GDP, life expectancy, and other factors. The Philippines scored negative 11.35 in the composite index, that's way behind the 15.6 regional average. Singapore, Hong Kong, Thailand, Vietnam, and Korea performed the best in the 2019 index. And the optimism does keep on coming when it comes to the markets. Take a look at our open here, up by 0.5% as of 9:34 this morning, breaking above the 7,400 levels still. And this, of course, following yesterday, the S&P 500 overnight in the U.S. edging higher for an 8th session. That's actually the longest winning streak of the S&P 500 since 2017. Even cryptocurrencies, Bitcoin jumped past $67,000. That's the first time that is a new all-time high. And this happens even as nations across Europe are seeing another surge of cases there. Germany's infection rate has seen the highest since the start of the pandemic. But what is bringing us above board? This is, of course, the net foreign inflows. Take a look at that. We've seen the highest net foreign inflows in 4 weeks just yesterday, and this brings our 5-day moving average inflows to $7 million per day. And of course, this comes and brought in the 4.8% increase of the at least the index over the past week. And there's still a lot of earnings to be digested for the third quarter. Let's kick off with JFC opening up 0.3%, closing in on 250 pesos per share. This, as they mentioned, their third quarter net income was 1.57 billion pesos. That's compared to a loss in the third quarter of last year of 1.58 billion pesos. This is on the back of their revenues jumping 24% in the first 9 months of the year. That's 37.20 billion pesos. But if you compare it to pre-pandemic levels, they're still lower. So their system-wide sales still 10.4% lower than 2019, or at least pre-pandemic 2020, and the net income is still lower by 6.1%. Now, another one to be watching out for is Robinson's Land. This, as they're down 0.5%. Of course, they had reported their earnings yesterday together with RCR, or the REIT. Their net profit in the third quarter is up 38%. You can see them already having jumped yesterday. They did mention that was on the back of improved operating conditions. Their mall business, they said, is gaining momentum, and you could see a lot of traffic, of course, yesterday in the malls. Meanwhile, you've also got RCR finally booking a profit there. That is net income of 633.79 million in the first 9 months of September, reversing their net loss a year ago. This after infusion of the sponsor of 12 office assets. And finally, DMCI, take a look at that, up by a hefty 3.3% this morning to 7.90. This, as they mentioned, that their third quarter net income was up by 112% year on year on the back of revenue surging 46% year on year. And even the first 9 months of the year, net income 250% higher year on year. And they are saying this is the highest third quarter revenue ever, and they do expect their fourth quarter results to be even better. Recall that we had already disclosed Semirara's mining profit contribution surging 252% on the higher coal prices. Checking in on the biggest headlines, PEZA-approved investments have dropped 25% in January to September compared to the same period of last year. Now, during the Global Biz Forum yesterday, PEZA Director General Charito Plaza said investments approved by the agency reached about 51 billion pesos in the 9 months to September. However, last year, PEZA approved over 68 billion pesos worth of investments. Plaza attributed the decline to the ongoing pandemic. But despite this, she said that the upside is that the eco zones retained their existing investors, while exports in these areas also went up by more than 17% compared to last year's. Now, to attract investments, PEZA continues to be aggressive in marketing and promotion activities with the help of foreign embassies. The agency is also working with the PCCI as foreign firms interested to do business in the Philippines often look for local partners. The Makati subway project has secured tax perks for the next 9 years. The Finance Department said the 81 billion pesos subway project will be given 4 years of income tax holiday. This is followed by 5 years of duty exemptions for imports of goods related to building and maintaining the project. Finance Secretary and FIRB co-chairman Sonny Dominguez explained that the incentives only apply to the Makati subway's railway operations. Other business activities related to the subway will be subject to the regular income tax rate. The Makati subway is expected to open in January of 2026. The government hopes the project could increase economic productivity by over 24 billion pesos each year. Everyone is, of course, hoping the third quarter GDP figures at 10 a.m. this morning will not poop the market's party. How likely is this? Here to weigh in, we have Mike Ricafort, Chief Economist at RCBC. Good morning, Sir Mike, and welcome back.
Hey, good morning, Danny, and to your viewers. Always nice to be back.
Sir Mike, give us your take on the third quarter GDP figures out in just around 20 minutes. After, of course, we've seen a slew of economic data in the third quarter. Unemployment, for example, higher in September. We've seen the highest number of cases in September. We saw ECQ in August. And we also had just the agricultural output reading 2.6% down year on year in the third quarter. But, hopefully some optimistic parts here. What's your expectation?
Well, the estimate for third quarter is around 6.5%. So that's still relatively decent because we came from a upwardly revised 12% in the second quarter because of the very low base or denominator effect. And we expect that the base effects to normalize gradually to more sustainable levels because yeah, that's understandably the fact that the second quarter of last year was really the bottom. That's the longest and maybe the tightest lockdown. The two-month ECQ from mid March to mid May, followed by MECQ, and we already had the economy reopened from that starting June of last year. So hopefully the denominator would pick up already from very low levels. That's why the year-on-year growth would already from 12%, it would gradually go to around 6.5% in the third quarter, and in the fourth quarter it would in view of that premise, it would be around 5.5%. So the full year growth would move closer towards 5% for the full year, and hopefully next year, because now we don't have lockdown. Hopefully, the lockdowns would be a smaller scale or granular going forward. We're graduating from large scale lockdowns in the city, provincial or regional levels. So we will be, that's already behind us, hopefully by next year. And we have an election year. So uh, coming also from a relatively lower base, GDP growth for next year would be around 6.5 to 7%. Well, because of the still the low base effects. But now, what's really critical is the uh, measures to further reopen the economy. We're already at the alert level system, and that's going to be also possibly implemented nationwide starting December. We already saw some areas outside Metro Manila piloting the alert level system since October 20. After the
Mhm.
pilot testing, the implementation in Metro Manila since September 16. So this is a de facto measure to further reopen the economy, and we're coming from a low base, and even up to next year. So hopefully that's gonna really sustain
Mhm.
GDP growth. At least these are, well, at least this year, around 5%, and next year at least 6.5 to 7% in view of that.
Sir, what about the sequential quarter-on-quarter growth? So even if we did see now it's revised 12% year-on-year for the second quarter, it was still a decline. If you look at the quarter-on-quarter for the second quarter compared to the first quarter, what's your expectation here for the third quarter? And of course, how will that be a complete reversal and a trend that will see quarter-on-quarter sequential growth for GDP?
At least, Danny, that's right. We would be seeing at least a quarter-on-quarter growth of about 3% in view of the measures to further reopen the economy. And well, at the same time, also towards the end of the year, yeah, it's still possible to see further pickup on the quarter-on-quarter, which is especially in the fourth quarter. Uh, of course, now, of course, there's a meaningful positive difference, especially now that the alert level 2 in NCR, there's even a possibility of easing it further to alert level 1 by December in time for the Christmas season, which is the well, that comprises the bulk of the sales for many businesses and industries. So, uh, yeah, and we have seen a lot of bright spots and green shoots already. For instance, uh, exports are near record highs on a monthly basis.
Okay.
Imports also are near record highs, but that's been partly bloated by higher global commodity prices, such as oil at 7-year highs and other global commodities near decade highs.
Sir, I
FD,
wanted to jump in on that oil story. Maybe you can nuance that a bit. Is that a big risk for you here when we're talking about inflation? Or, there's an actual price rollback today. Do you think that the oil prices have already peaked? And will this be affecting our growth story as a net importer?
well, it's lingering among 7-year highs lately. Although we saw some modest downward correction since for the past 2 weeks, maybe reaching to at some point reaching to the lowest in a month. But now it's among the still the lowest in 2 to 3 weeks because of the story of the resumption of negotiations on the Iran nuclear deal, the possible easing of sanctions. The negotiations scheduled to start towards the end of the month by November 29. And hopefully, if there will be some easing of sanctions, some resumption on Iranian oil exports. But however, the bigger picture would there are still disruptions in the global supply chain. Uh,
Okay.
that's why, especially we're already into the winter season, so it's inevitable and compulsory for countries to secure supplies in time for winter. So it would be a moment of truth come springtime after the winter season. We would really indeed find out if this would be transitory by
Okay.
then. And hopefully, what's really when the emerging signs is that many developed countries are moving towards herd immunity already in the coming
Mhm.
months. So that would be in time by early next year. That on the supply side, well, on the production side for many industries like energy and many manufactured industries that all disrupted by the pandemic in terms of reduced production. And here we go. That's on the supply side, including logistics disrupted in view of the quarantine measures, the social distancing, and so on. And here you go. On the demand side, we've seen some pickup in demand because of improved global recovery prospects. So with that, the supply wasn't able to catch up as well lately, and hopefully market forces would come into play with herd immunity,
Mhm.
for some developed countries. So hopefully they would be able to going back to normalcy on the production and manufacturing side. So hopefully the supply side would try to catch up, especially early next year or by springtime. And
Okay.
inflation would definitely eat into the recovery story, that because what would otherwise go to disposable income would go to higher spending on oil to pay for higher prices of oil and other global commodities, and of course the other affected products and services, because the pass on costs, although the pass on costs, well, the pricing power has been limited by, of course, the pandemic. Demand is still relatively modest and subdued. So some of the producers end up absorbing the cost, and that results to tighter margins. So hopefully, well, of course, inflation would be that's part of the recovery story. Demand
Okay.
picks up and inflation kind of picks up, but hopefully things would get better, and market forces would, uh,
Normalize this.
yeah, they would.
Sir, but you mentioned herd immunity. What's your take on? Are you satisfied as an economist with the vaccination rate at the end of the third quarter? 20% lang po, and then now I think we're approaching 30%. But still quite far from the herd immunity targets. We have less than 2 months to the end of the year. This was something that most people were watching. Our vaccination rate versus the reopening of the economy and sustaining that growth. Is it still something that you are worried about?
Well, Danny, yeah, it's kind of course, there's a need to speed it up in that respect relative to the other countries. No? And well, hopefully, those with the first doses, give it a few weeks. Maybe most of the vaccines, the second dose would come in about, well, after a month's time, maybe except for AstraZeneca, it would take longer, 2 to 3 months. So those in the first dose would come into the fold of the fully vaccinated people. So there's mathematically there's a good chance to have population protection nationwide as early as the end of the year. I mean, plans also to accelerate the vaccination, and that may also include the pediatric vaccination for the 12 to 17-year-olds, and the plans to accelerate the vaccination to a target of 1 to 1.5 million doses per day from the what we have been used to seeing around 500,000 per day. So, and hopefully, doing the math, herd immunity for the country, that means a revised target of at least 80 to 90% of the population. That could be mathematically be achieved by, well, hopefully before the elections at the earliest, or before before the middle of the year, and that's gonna help sustain the gains in terms of much reduced new cases. We have seen that in the region, in countries like Indonesia. They're just in a few hundreds, considering their population is 3 times or 300 million. And
Yes.
they were able to manage it properly, and that would justify further reopening of the economy. And initially, uh,
Mhm.
shifting the NCR to alert level one,
Mhm.
and also the adaptation of the smaller or granular lockdowns and alert level system nationwide. So that's going to really reopen the economy, eh,
Okay.
allow more businesses to reopen again at higher capacity, more sales, more employment, and better fiscal position for the government, because they will be able to collect more taxes. Lockdowns are very expensive, so less expense on the lockdowns, and that's going to narrow the budget deficit and reduce the need for borrowing. So it's really solved a lot of problem for the economy
Uh,
if you reopen the
sir,
economy.
thank you so much for those insights. As you mentioned, Paul, we are waiting for the GDP to come out in just a few minutes. So we'll see whether your 6.5%, year-on-year figure there will suffice as well, and of course, bringing us hopefully to the 5% forecast that you have. Thank you so much, Mike Ricafort, Chief Economist at RCBC.
Thank you so much, Danny, and to your viewers. Always a pleasure.
And that's the first look into the business day. Today's Tuesday, November 9, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.